Hello, I'm Matt Lampert, the Director of Research at the Socionomix Institute. Welcome back to this series where we're introducing socionomics. And today's installment is all about using socionomics to spot risks and opportunities in real time. Now, in our last installment, we talked about how the stock market is an indicator of social mood. Traders are expressing their optimism and pessimism in the market, so we can use trends in the market to understand and forecast other areas of social activity where people also express their mood. So how do we use this stuff in real time? Well, to show that, I thought we could look at some examples. So let's start with Russia. Now, it's no secret in the headlines that today, relations between the US and Russia are at their most tense since the Cold War. Well, that was not the case just years ago, back in 2007. At that point, the Russian stock index, the RTSI, was up 5,000% from its 1998 low. Its leader, Vladimir Putin, posed shirtless on the Kremlin's website. He was named Time magazine's Person of the Year. Russia, along with Brazil, India, and China, were touted as areas where there was amazing opportunities for Western investors. And so there was a buoyant optimism about the future of Russia. Now, why was that? Well, from a conventional point of view, if you're a conventional forecaster, a conventional futurist, what do you tend to do? Well, as Robert Prechter argues, conventional forecasting typically just takes a trend in motion and extrapolates it into the future. It's basically one of Newton's laws of motion, right? An object in motion tends to stay in motion unless it's acted upon by an opposing force. Well, people apply that same perspective to social trends. They say, hey, the social trend is going to remain in force unless some other event comes along and alters its trajectory. So they're extrapolating linearly. So things had been getting better in Russia, so they said they're going to continue to get better. This is great. Russia's shedding its Cold War image. It's going to be a team player on the international stage. It'll be a great investment opportunity. Well, at the Socionomix Institute, we look at things differently. We do not extrapolate linearly. We have the Elliott Wave model, which allows us to extrapolate using a fractal. In other words, we have a tool that helps us to foresee the future for trend change. So my colleague Alan Hall looked at all of these social manifestations in Russia as signs of a positive extreme in social mood. And he used the Elliott Wave model to confirm that interpretation, and he diagnosed a high probability for a major trend change in the market. And he said, if the market starts to decline, we get a big bear market in Russia, that change in psychology, that change in mood that's motivating that behavior will also motivate a change in the tenor and character of Russia's social actions. So what kind of a change did he expect? Well, in Robert Prechter's book, The Wave Principle of Human Social Behavior, he lists traits that are more common when mood is positive and traits that are more common when mood is trending negatively. Now, this list here that we're looking at in this table, it's not the full batch, but it's a pretty representative group of the kinds of traits we would expect in a positive mood relative to a negative mood environment. So when mood's trending positively, we'd expect to see trends toward acceptance and accommodation, agreeableness, benevolence, concord, constructiveness, and so on. Whereas when mood trends negatively, we'd expect to see the opposite manifestations. We'd expect to see more trends toward rejection, obstruction, antagonism, malevolence, discord, destructiveness, polarization, and on and on. Now, of course, there's always a mix, right? Social expression is never one-sidedly positive or one-sidedly negative, but the question is, what's the ratio of the quantity and intensity those positive expressions relative to the negative expressions? So this is a diagram from Robert Prechter's work of the relative quantity and extremity of positive mood manifestations that we would expect to see relative to negative mood manifestations. And if this bar represents where social mood is at any particular instant, then as mood becomes more positive, let's say this bar is all the way up here, then we'd expect to see a greater quantity and intensity of positive mood expressions relative to negative mood expressions. Whereas if mood's quite negative, maybe the bar is down here somewhere, then we'd expect to see a greater quantity and intensity of negative expressions relative to positive expressions. So in Alan's analysis, Russia was at a positive mood extreme and was very likely to begin a trend toward negative mood, where the quantity and intensity of social expressions in Russia would align with traits on the right side of that table that we looked at. So while conventional forecasters saw blue skies ahead, Allen diagnosed the probability for trouble. He forecast a severe negative social mood trend in Russia, a steep decline in the markets, a resurgence in Russia's military, the concentration of power under an authoritarian executive, and a host of other traits that reflected that negative mood trend. So just months after Allen published his study, the RTSI fell through the bottom of his target zone, and about a third of the way through that steep drop, Russia invaded Georgia. Now, after that initial decline in the market, there was a rally, and consistent with socionomic theory, Russia did not engage militarily with any country or territory during that respite, during that period where mood was trending positively for a little bit. But once that decline resumed, social expressions in Russia again began to reflect that negative mood trend, and during this second leg of the decline, Russia invaded Ukraine and annexed Crimea. And this mood trend has continued. We see all sorts of expressions, whether it's Russia's involvement in Syria or the cyber attacks that Russia's instigating against other countries. This may sound like it's something new, but it's really just another manifestation of a long-term negative mood trend that Alan Hall at the Socionomics Institute was able to identify before it happened. So this is an example of using socionomics to spot risks. Let's look at the flip side and use socionomics to spot opportunities. Back in 2009, my colleague Ewan Wilson was interested to see if there was a relationship between trends in social mood and trends in drug use. And he didn't really find very much there, but what he found was even more interesting. Where there was a connection was between trends in social mood and social tolerance toward drug use. Ewan surveyed about 100-year history of social attitudes toward marijuana in the US. And what he found was that when mood was trending positively, the psychology seemed to be, okay, things are going pretty well, we've solved a lot of problems in society, we can finally turn our attention to rid ourselves of some of the social ills that have plagued us, and society tended to crack down on substances like marijuana. But when that psychology changed, when mood was trending negatively, people thought, gosh, there are all kinds of problems in the world, so what if someone smokes a joint? And society tended to relax those restrictions on marijuana use. So Ewan was writing in 2009, he had just lived through the financial crisis, a period of profoundly negative mood in the US, and so he published a study in the Socionomist called The Coming Collapse of a Modern Prohibition, where he forecast the repeal of marijuana laws. And just a few years after that forecast, states started to legalize recreational marijuana use. The first two states came on board in 2012 with Washington and Colorado, and by 2014, legal marijuana was one of the fastest growing industries in the US. Now, this is a whole business that didn't even exist on the legal side a few years ago with recreational pot, and now in Colorado alone, it's $1 billion industry. Now, even though there's been an opportunity here, we want to keep vigilant for risks, so with stocks in the US at all-time highs, it wouldn't be surprising to see the pendulum swing back the other way and actually see more crackdowns on pot. So you can use socionomics to spot risks and opportunities, you can use it to understand history, but you can also use it to act. And so in the next installment, we're going to move from thinking socionomically to acting socionomically. It's a crucial step, and I hope you'll join us.